This is exactly how futures came about. Okay, it used to be a one-on-one transaction between a buyer and a seller. Okay, doesn't quite work like that anymore. Obviously, we have exchanges like we do with stocks. Okay, where those transactions are being, transacted, I guess, every day. But futures markets, you guys have all heard of them. Whether you've heard of futures or not, have ever traded futures. When you hear them talk about crude oil, this is a big one right now. They're talking about the futures contract. Okay, and we can all be upset that, oil has gone up so much. It's fallen quite hard here the last couple of days, which we haven't seen reflected anywhere. Yeah. But there's everything. Gold is another big one that's happened here over the last few years where price of gold has gone through the roof. When you hear them talk about gold, they're talking about futures, the futures market. Okay? And now there's futures markets for almost anything you can think about. Okay? Cattle, all the precious metals, there's futures markets for everything. Okay? Soybeans, corn, that was a big one a couple of years ago when we started talking about ethanol. And if price of oil keeps on coming up, I'm sure they're going to talk about it again. Apparently now there's also futures for rainy days that a lot of farmers will trade. But there's also futures for indices like the NASDAQ, the Dow, the S&P 500. If you wake up in the morning, let's say 6:30, 8 o'clock in the morning, and they say, hey, the Dow is trading down 20 points pre-market. Well, we know that's not the cash market because the cash market doesn't open until 9:30. They're talking about futures. Talking about futures. Now, futures have become very popular here in the last few years. And certain things are traded more than others, and we're going to talk about one specifically today. But things like, for example, cattle. Cattle futures are mainly traded by farmers, hedging their livestock. Okay, again, if we go back to our pig and bacon and ham pigs, again, it's another futures. There are futures for swine. Okay, but if I'm raising cattle, for example, okay, what happens if the price of cattle goes up and I can't sell my cows? Well, it might put me out of business. So what's one way to hedge against that? Trading cattle futures. And if you actually go, to the Midwest and where a lot of these cattle farmers are a little bit further south, if you knock on their door, a lot of them are either trading them themselves or have someone trading futures for them in these products. Same thing with corn producers. An example I like to give about crude oil. I don't know if everybody remembers back in 2007 when the price of oil went to $150 a barrel, which we're kind of a little bit nervous about right now as well. At the same time that was happening, we saw the bankruptcies of several airlines, okay, and the struggles, and that's when they started charging for baggage, getting rid of peanuts, making getting rid of everything, okay? That year, a company called Southwest Airlines actually had a profit, the only airline company to make a profit, and the reason they made a profit was not from selling airline tickets, it was from trading crude oil futures, okay? So we see a lot of companies nowadays using them as hedge positions, right? A lot of mutual funds will use the indices as hedge positions, or if it's a mutual fund that's trading gold stocks, they might use gold as a hedge. But we see a lot more speculation now as well. People just trading, day trading, or even longer term trading the futures, and we're going to talk about that a little bit today. Archer's Daniel Midland with corn back in 2007. It's another big example. Okay, but there's futures for a lot of things. There's so many futures. We're gonna hold questions to the end, and then I will answer whatever you got. Okay, I'm going to talk about here mainly today the S&P 500 futures. Okay, because we can't touch on all of them, but we're going to talk about the S&P 500 futures for a couple of reasons, and we'll get into it. Okay, the first one is when they trade. Futures markets open at 6 p.m. Eastern Standard Time. By the way, I want to make sure. I know that I did a couple of videos and I didn't mention that. But Eastern Standard Time. So everything I'm talking about today will be Eastern Standard Time. Okay, they open 6 p.m. Eastern Standard Time, which means you can trade them at 6 p.m. on Sunday night, right? And then they close at 4:15 p.m. Eastern Standard Time on Friday. They're open basically 24 hours. Now, there are some exceptions to that. It closes for 15 minutes every day, Monday through Thursday, from 4:15 to 4:30. And it is closed on some holidays. This is important to remember for a couple reasons. Futures are a global business. When we talk about stocks and the stock exchange, if we're talking about a stock that's trading on the American Stock Exchange, the American Stock Exchange on American holidays are closed. Futures are a global business. So when we have, for example, we have Memorial Day coming up here in a couple weeks. Now, Memorial Day, that is a what? It's a U.S. holiday. American markets will be closed, but guess what won't be? Futures. American Thanksgiving, do you think that there's a lot of people that celebrate American Thanksgiving besides Americans? No. Again, it's another day where futures actually trade. So these days where we see the stock market closed, where you're unable to trade stocks and stocks and options, the futures markets are open and are always tradable. Okay, another example that Frank was talking about here a little bit before we started the presentation was on Sunday night. I remember I play hockey in a league on Sunday nights, and as soon as I got out of the shower, got into my car after my hockey game, first thing I heard on the radio was that Osama bin Laden's dead. Okay, very good news, right? But it was, what do you think that did to the market? Here's an example. This is exactly what it did to the market. Now, if you were trading stocks and options, what could you do with this news? Absolutely nothing. Absolutely nothing. Okay? With futures, we're able to make a trade anywhere. This is actually 6 p.m. right here on Sunday. This little line separates the 4:15 close on Friday and the 6 p.m. on Sunday. And you can see here, this was all tradable to us overnight as well. So for those who have 9-to-5 jobs, right, there's options to trade in the futures market before the market ever opens. Okay, yes, you can. Go ahead.
Just for a second, just because I want you to realize what this meant. Now, not everybody does this, but there's a big difference in our styles. I am mentally diffused. When you see this happen, what we really would think, and you want you to think about this. Now, the market had been doing very well, right? So the market had gone very well. The market was going very strong at that time. Even without Obama being killed, we were at the high of the year right then, even before it happened. When we got a spike of only 10 points instead of 30, it told me the market was weakening. Now, for you guys that are trading options, and it's fine because it goes together. When you're trading options and you only see a 10-point spike, you know the market's going to come down from there. We know we were near the high. So I made a trade to the downside. I got up. I'm watching TV, and they're watching a regular show. And actually, I was a little ticked off because it cut off the show. I didn't get to see the end of it. And I ran to my computer, and I shorted this. Now, I didn't get 73, 75. It happened very quickly. But I did get the 1370. I played that short. Now, you don't have to do that, but it's $50 a point for each point. He's going to talk about it. But for me, it was a trade. For me. It didn't mean that everybody would do it, but I went back to my computer and I ran to tell all of our members. I said, look, if you're not nuts, get in this trade. I mean, you've got plenty of time. Market hasn't opened. More likely than not, we're going to go down. We didn't go down a lot before the market opened, by the way. We went down about 4 points. But it was still, still 4 points, $200. It beat eating out. And I'd already paid for dinner, so now I just paid for my dinner. The issue is that you can take this great opportunity, and I don't want to oversell what futures can do. You don't need a lot of money. He's going to talk about that. But you do have opportunities that you get when the market's not open. And they're great opportunities. He's going to talk about different things that happen with news. But news is such a huge factor on what happens to the market in a day. What happened on Friday? I mean, I don't want to overdo it, but Thanksgiving, and I only wanted to bring up Thanksgiving for a minute. 2 years ago on Thanksgiving, they the banks in Badai, was it Badai that had, what's the name of the company, the country that, Dubai, I always want to call it Badai, and it's because I play Baidu. Anyway, so here goes this country is bankrupt, right? They announced that the country is bankrupt. Well, what do you think is going to happen to the market? I mean, it's going to tank, right, when you hear that. So again, typical. It was Thanksgiving. He's eating dinner, and I'm in there putting a trade in. You don't have to play a lot, but it's worth taking that shot. What do you think happened when the tsunami hit Japan? It was terrible to watch. Terrible. I felt bad. You couldn't trade it. I made 20 points. It's just an opportunity. You don't need a lot in the pot. Even if you only played those deals, those plays, you'd make a great living. But you don't know when they're going to come, so you have to just have a computer with you at all times. Anyway, I'm going to let him back, but I just want you to realize that trading futures is an option. It's just another option. And having a small pot, because you don't need a lot to trade it, and having the money available to make those trades, even with just one contract, is fabulous. So I'm going to let Nate go on and talk about that.
He likes to get a little ahead of the curve there sometimes. Okay, so how they trade. Again, we talked about this, like stocks, futures trade on exchanges. It's becoming very popular. Okay, so there's exchanges all over the world that trade the futures. A couple of you have heard of the CME, obviously the Chicago Mercantile Exchange. They often show pictures of that on CNBC, if you watch that, or Bloomberg. Same thing with the NYMEX is another one, the New York Mercantile Exchange. There's exchanges in Philadelphia, in California, all over the world, in Britain, in Shanghai, in Germany. There's exchanges all over the world that are exchanging futures contracts. Right? So when I buy, I don't have to worry about knocking on the door of someone, to sell me, a contract. Okay? I have these exchanges and where that it's taking place. Okay? We're going to continue with some basics. Now, there are some differences between stocks and futures, like stocks and options. Okay? Stocks, we know, represent ownership. Okay? If I own a share of Microsoft, I actually own Microsoft. Now, mind you, if I own a share, I own a very small part of the company, but I own that company, and I own it indefinitely until either A, it goes bankrupt, or B, I sell it. Otherwise, I can pass on that stock, forever. On and on and on and on. I know a lot of people's grandparents have done that and parents have done that. Where with futures, it's different because we have a finite lifespan. They expire. Remember our example that we had with the pig and ham. Okay, we had a 60-day contract. It's a contract that expires. Like options, they expire. Okay, and it does not give me present ownership. Again, let's go back to our pig and ham, example. When we had that contract, did you own the pigs from day one? No. Okay, it does not give you present ownership. Now, how they trade. Again, we're going to talk about the S&P 500 futures. We call that the E-mini, and it trades in quarter point increments. Okay, so each quarter point is worth $12.50. 1 point is $50. So the way that it moves, let's say the price was at, where's it at? There we go. Let's say the price is at 1303, and it's moving up. Okay, you're going to see it move from 1303 quarter, 1303.50, 1303.75, 1304. Okay, it moves in quarter point increments. So for an example, if we bought a contract, right, or we went long, synonymous terms, right, and we open a position on this symbol, /ES is just the symbol for the S&P E-mini, just as AAPL is the symbol for Apple. This is the symbol for the S&P E-mini. And let's say we go long at 1100, and it goes to 1103 and we sell. So we bought, it went up, awesome, we sold it, and we made, what, 3 points, right? So what did we make? Right, we bought 1100, sold 03, 3 points, $50 a contract, $150.